The stock market is made up of exchanges like the New York Stock Exchange and NASDAQ. Investors can buy and sell stocks through brokers. Beginners should be aware that the stock market can be volatile. It is also important to know that you can lose money in the market even if your investments grow. What is a stock? Stocks are shares in companies that choose to be publicly traded and listed on a stock exchange. The term stock is also sometimes used to refer to equity securities in general, as opposed to debt securities. A company issues stock to raise money and give shareholders ownership of the business. Stocks have historically provided higher returns than other major asset classes over long periods. Investors make money from stocks by either selling their shares at a higher price than they bought them for, or receiving dividends, a portion of a company's profits. They can also make money by investing in funds, such as mutual funds and exchange-traded funds, which are composed of various stocks and other investments such as bonds. The value of a share in a company is determined by supply and demand, not by the company itself. Generally, companies issue shares to investors through an initial public offering or IPO. Once on the market, shares can be sold and bought by any investor willing to purchase them. The price of a share fluctuates daily based on a number of factors, from overall market volatility to news about the company itself. As a shareholder, you have the right to vote on company matters and participate in the growth of the company's earnings. However, not all companies make a profit or even stay in business. This can be a big risk to take when investing in the stock market. In some cases, a company's stock can decline for a long period of time, which is often called a bear market. This is a normal part of the stock market cycle, and it typically follows an extended period of growth, which is called a bull market. While it's common to hear about the stock market from headlines and television shows, most people have very little understanding of how it works. It's important to understand the basics of how it works so you can make informed decisions about saving and investing. You can learn more about savings and investing here. How do stocks work? Investing in stocks is a way to make money, but you need to do your research. You should know how much you're willing to risk and the type of return you want before investing in stocks. It's important to keep in mind that stocks fluctuate, so you may experience gains or losses. However, if you invest wisely and manage your risks well, you can grow your money over time. Companies sell shares of their ownership, called stock, to investors to raise funds and expand their business. The value of a share can rise or fall depending on the company's performance and the overall economy. Investors buy shares in companies that they think will perform well and hope to turn a profit when they sell their investments. The most common way to invest in stocks is by using an online brokerage account. The accounts are free to open, and you can purchase shares of a company or investment funds that hold many different stocks. The goal of investing in stocks is to earn a higher rate of return than the cost of inflation over the long term. You can do this by investing in stocks that you believe will grow their value, or by purchasing mutual funds and other investment vehicles that provide a diversified portfolio of stocks. When a private company wants to raise money, they can offer stock to investors through an initial public offering, as IPO. The shares are then traded on a stock market, where investors and traders can buy or sell them. Companies that are publicly traded follow strict reporting requirements, which helps maintain shareholder confidence in their performance. Stock markets are dynamic, with prices determined in real time by the collective actions of buyers and sellers. This process helps direct capital to the most promising businesses and promotes economic efficiency. Even experienced investors often struggle to predict the performance of individual stocks. It is difficult to know if a stock will rise or fall, so beginners should focus on investments that are likely to perform consistently over the long term. These investments are called blue chips and include large corporations with a track record of stability. They also offer lower volatility than stocks that are expected to perform more rapidly, like tech companies. How do I invest? Stocks are shares of ownership in a public company, which means you can earn a profit if the company performs well and grows. Beginner investors often buy stocks through an online brokerage account where they purchase individual shares of a company or mutual or exchange-traded funds, ETFs. Before you invest in the stock market, it's important to understand what your goals are and how much you can afford to lose. This will help you avoid making decisions that could jeopardize your financial security and keep you from achieving your investing objectives. Take a hard look at your income sources, spending habits, and savings. Then set aside money from each paycheck to invest in the stock market. The more you save, the faster your investments can grow. It's also helpful to know how long you want to commit to the stock market. It's important to divorce yourself from the daily financial news cycle and remember that investing is a marathon, not a sprint. Then choose a broker to open an investment account with. There are many options available, including full-service brokers, discount brokers, and robo-advisors. A full-service broker will provide you with research tools, market analysis, and educational resources to help you make informed investment decisions. A discount broker will typically offer lower or even zero commissions per trade, and a robo-advisor will automate the investing process for a flat fee. If you're a beginner, you'll probably want to invest in low-cost mutual or ETFs that provide exposure to the entire market rather than individual companies. These funds are often managed by professional fund managers who seek to maximize returns while reducing risk. Once you've chosen a broker and a portfolio, start investing. It's a good idea to set up automatic contributions through your brokerage or robo-advisor. This will give you a consistent, regular contribution each month and prevent you from reacting to short-term market fluctuations. Finally, be sure to monitor your investments and rebalance your portfolio when needed. How do I choose a broker? When entering the stock market for the first time, investors must choose a broker that aligns with their investing approach. Whether they are active traders or long-term investors, the right brokerage can help them build a strong investing foundation. In addition to serving as a platform for trading, the best online brokers for beginners offer educational materials and resources to support new investors and help them grow their portfolios. To select a broker, consider several factors, including account minimums, commissions, and maintenance fees. It's also important to read online reviews and ratings. While these should not be the sole determining factor, user feedback can provide valuable insight into a company's service and overall user experience. Beginners should also consider how hands-on they want to be. If they are more of a passive investor, they should look for a brokerage with low minimum investments and no commissions for buying or selling stocks. Investors should also consider the number of free research tools offered, such as market research reports and financial news from sources like Reuters or Morningstar. In addition, the broker should offer a robust mobile app and provide educational materials and tutorials to help them understand how the stock market works. Some brokers, such as Schwab and Interactive Brokers, focus on keeping costs low. Both offer a variety of free market research reports and news, and their mobile apps are fully featured. Schwab's trading platform is easy to navigate and features a full range of tools, including charting capabilities. Investors can also take advantage of its ETF screener, which is helpful for finding good long-term picks. Another option is Bank of America's Merrill Edge Self-Directed Investing, which offers a wide selection of commission-free ETFs and mutual funds, plus it is available to customers at 2,000 branches and through its website. Its mobile app is simple to use and includes features for new investors, such as a calculator that helps calculate how much to invest and the impact of fees. Public is another good choice for beginner investors. Its mobile app is simple to navigate, and it includes features for new investors such as allowing users to buy fractional shares. The broker offers an extensive list of research tools, including free Reuters market news and reports, as well as a robust ETF screener and a fund comparison tool.